of Astronaut Capital, a licensed asset manager focused on providing an outperforming investment vehicle to retail, sophisticated, and institutional investors. And through extensive research, detailed due diligence, and a constant drive for alpha, Astronaut Capital has become one of the leading managers of cryptocurrency and digital asset investment. We're also very pleased to be joined by Mr. Jonathan Emsley, analyst from Chainfund Capital. And our third speaker is Mr. Joel Kovshoff, director of BlockRake, a business consulting firm specializing in end-to-end company model in blockchain technology, IPO, ICO, STO management, marketing, and regulatory compliance and business operations. We also have Mr. Ivan Soto-Wright, founder and managing partner of HODL, an asset management company and venture development studio that builds, stakes, and invests in the world's leading crypto and blockchain founders, exchanges, and protocols, as well as tokens. And our moderator for the session, ladies and gentlemen, is Mr. Henry Liu, director of ADAX. So if you're ready, please warmly welcome our speakers and our moderator. A big hand, please.
Good morning, everybody. This is our first panel of the day, I believe. Thank you guys for coming out so early. Thank you to Elevator Returns and Cibico for hosting this incredible conference today. So the topic we have today for this panel is how is the state of the crypto market and how big our STO is going to be. I think those are two very different questions. And so I'd like for us to be able to cover both of them. But on our panel today, myself as a moderator, my name is Henry Liu. I'm managing director of ADAX, we're a licensed token issuance platform and security token exchange. And I'd like each of these gentlemen to sort of spend a few minutes to introduce themselves and sort of how they're related to the space that we're talking about today.
Hey everybody, great to be here, great to be in Thailand. I'm Ivan, I'm the founder and managing partner of Hodl.vc. Hodl means hold on for dear life. This is definitely a volatile industry, and for us, we're really excited to shape it. We focus on three main things. One is building, so we build and incubate companies in the space. We partner with leading corporations and educate them on opportunities in digital assets. And we also invest, so we have our own investment book as well. Kind of my main focus right now is really around crypto adoption, digital asset adoption. I think security tokens, we're really at the beginning of this wave. I think there's a lot of opportunities to really examine the infrastructure and the building blocks that are going to enable us to see this market really grow. I think it's particularly interesting to be in Thailand because it seems like regulation here is very progressive in terms of enabling people to access digital assets, to access digital securities, and excited to explore the topic more today.
All right. My name is Joel Kovshoff. I live in Thailand, Sawadee Krap to everyone here. We focus, we're a Wyoming-based company called BlockRake. We focus on similar things to Ivan. We incubate, we go to companies that don't really have the business mind, and we get them the marketing, we introduce them to investors, we make sure that they're set up for success long-term. I'm a former educator, so, sorry about that. I'm a former educator, so basically I come in and help the companies understand the new space, the new landscape that STOs, ICOs have become, what they are, and just educate them so they understand how it's different from an IPO and if it's the right move for them, because maybe it's not. So that's basically a little bit about what I do. I'm going to let the other guys talk. And so.
Hi, I'm Jonathan Emsley. I'm an analyst at Chainfund Capital. So we are a venture capital fund based in San Francisco, but we also have offices in Dubai and Singapore. So we are really focused on accelerating the transition to what we describe as Finance 3.0. So that's the next generation of financial technology. We're seeing huge growth in finance. We believe that finance has a long way to catch up to a lot of other sectors that have seen huge transformations from digital technology. So we are investing in capital markets infrastructure, payment infrastructure, and we're doing everything that we can right now to see this transition.
Cool. Hey guys, my name is Matt Dibb. I'm the CEO of Astronaut Capital. We have a mandate to look to seed and invest in early stage companies in blockchain. So I think to date we've probably done over 60. Right now our focus is certainly looking at this STO arena and what's going to come out of it. I also come from a research background, as does my company, so I own another called Piccolo Research. And effectively for us, we like to pull open a company and be able to evaluate it based on that. And for STOs, that's what we're getting excited about, is that in contrast to ICOs, for example, there's a lot more information that we're going to be able to get to make better investment decisions. So, that's us.
All right, so I just want to get a feel of the audience that we have today. By raise of hands, how many of you have invested or purchased a cryptocurrency before? Okay, about a quarter of the room. How many of you have bought stock in a publicly traded company before? More of you. Okay, so why don't we start with this question, guys? When you want to compare an STO to an IPO, for example, how would you sort of evaluate what you're investing in? And I know the STO space is very new, quite immature, but what are some of the strategies that you would use to evaluate these type of projects and investments?
So I think it's worth maybe just backing up on STOs and where they kind of came from within this kind of overall cryptocurrency ecosystem. So we obviously saw ICOs. There was a hype cycle, a lot of excitement, and these tokens that people were able to create, these new currencies that people were able to create. And for a lot of people, there were a lot of questions as to why people were creating these tokens. And I think the question was, is there a fundamental asset behind these tokens? Are these tokens maybe securities? And I think the vast majority of the people that raise money in ICOs were doing it for the purpose of fundraising. And because of that, I think regulators took notice and they said, well, I think this kind of smells and looks like a security, probably is a security. Obviously, there are exceptions to that. There are bona fide decentralized cryptocurrencies that aren't securities. But I think now that the regulation and kind of institutional investors have started to take notice of opportunities within digital assets, where we are now is really thinking about how can we create these new tokens that represent bona fide securities, and how can they be compliant with existing regulation. I think where we are now, it's very interesting looking country by country. There's different security token or securities laws, existing securities laws, and how do we apply that legislation to this new digital asset space. So I think right now, I think the opportunity is, it's interesting. I think a lot of people got excited about ICOs and they said, oh, great, there's this new wave of security token. Why don't I just raise money via a security token? But I think it's really meant for more mature companies, new opportunities like real estate. It's a great example. And for me, when I look at security tokens, it's really offering a new vehicle that hopefully will have some sort of secondary trading liquidity. And where we are now is because we're so early, those mechanisms and markets don't really exist yet. That we're just seeing the very, very beginning of them. We're seeing big regulated security token exchanges come to fruition as kind of we speak now. And so, yeah, there's a lot of opportunity for this space to grow. I think it really, right now, we need people, we need leaders like Stefan at Elevated Returns thinking about how to apply this technology to real bona fide assets. So I think real estate's a really interesting opportunity. And so when I look at evaluating kind of security tokens, you can evaluate these with the same fundamental frameworks that you evaluate traditional securities today.
Yeah, I can agree with that. I would say that the STO market is very similar to the old IPO system. The difference is with STOs, you don't have right now, you don't have a secondary market really. It's going to be growing. The infrastructure is definitely growing around it. What we need to see now is people building things that actually people get excited about. Last year we saw people or 2 years ago, we saw people get excited about the opportunity to create something new, something different. Now we're looking at the same thing, but we need to actually build the infrastructure around it because we are in a regulated environment and we don't have everything really smoothed out yet. So I look at STOs kind of like a private equity play at this point, where you're going to be investing in it knowing it's the future, but not expecting a year from now to be able to cash in on your investment. So I really do believe that the STO markets are going to explode potentially, but not now. It's not going to happen like it did in 2013, where overnight, things are going to explode and move up, and everyone's going to be talking about it everywhere. We're going to see all these different companies, starting probably with real estate, maybe funds, and then we're going to see the smaller guys come in, the pizza shops like Pizza Hut potentially, having Pizza Hut have their own token. And that will give them the ability to do so because it will be cheaper. So middle-sized, mid to large-sized companies will be able to actually do this and be able to be traded. And that's something that I think we're waiting for and we're going to see. And we really need to build that infrastructure and potentially involve national stock exchanges in doing so.
Yeah, so I think that these are really interesting points. And to carry on in the same vein, I think it's important to look not at STOs not as some sort of crazy new movement. If we just look back at the last 10, 20 years, any technology that has disintermediated has been met with a lot of scrutiny. Say Airbnb or Uber. These things, people are not sure about them, and there's a lot of pushback initially. But at the end of the day, they lower costs, they're much, much faster, and they're much more convenient, and they're built for a digital economy. So I think that the same thing we've seen with ICOs, the technology was there. People could transact value in a peer-to-peer fashion, and it was not regulated. But the thing is that was this initial kind of uprising, similar to what we've seen with those other companies that I mentioned, 10 years ago, 15 years ago. And now all of those companies are considered legitimate. They've worked out the regulation and the infrastructure. There's still some things that are being worked out along the way, but it's very important to notice that, we can't expect this complete holistic industry to just, come out of nowhere, especially the finance is such an old infrastructure with, the US Securities Act written in 1933. Like, you're not going to see these changes happen overnight. But as for analyzing STOs, yeah, I think that over time it will just be considered a very legitimate and efficient, cost-effective, fast means of raising capital. And yeah, I think that the same kind of traditional scrutiny and analysis will apply.
So in a previous life, I was more into IPOs, and I'm seeing a lot of similarities in terms of investment and attitudes towards investment with STOs, even though we're not quite there yet. And what Joel said was a really good point. Infrastructure is what we need to invest in now for STOs, because it is going, no matter what, it's going to be a big thing. You've got security tokens, and then you've got tokenized securities, and there is a difference. Tokenizing existing financial products, making things that were illiquid liquid. Imagine being able to get a venture capital fund that's already been running for a few years and being able to break up that holding. Say, for example, there's 100 shares in that, and being able to actually tokenize that and have that traded amongst anybody. So bringing liquidity to the market, I think, is huge, and that's why for STOs, it might take some time, but as long as the infrastructure is there, then it's going to happen.
So Matthew, this is for you, Jonathan, too. The both of you come from a research background. And for a lot of the people in the audience today, I know some of them come from an investment background as well, looking at what to invest in this space. How would you evaluate a project, not from the issuance side, but more so from, let's say, you're trying to invest in something, you feel like there's going to be liquidity in the market soon for products such as the ones that are coming out in Thailand, the ones that are already out in the US. How do you evaluate a project, and which ones do you get behind?
It's a hard one because there isn't that many projects out there right now. Property, for sure, is a big one. And yes, you can put a number and an valuation on a lot of the property STOs, which is great. There are some, for example, Lottery.com just raised $52 million. Not many people are talking about that, but you know what? That's bigger than any other ICO in the last 6 to 8 months. So can you value these? Yeah. You can do a discounted cash flow. You can do a whole wide range of different models to value these, depending on what type of investment they are. But what are the sectors I'll be looking at right now would be effectively property, I think, is number one. It makes the most sense. And next to that would be businesses that have actual revenue, that simply just need a cash injection.
Yeah, so I think it's still, we're still very early, so there's still a lot of infrastructure to be built. We at Chainfund, we look at infrastructure and assets, but we haven't been investing very heavily in infrastructure because, there's not really, in many jurisdictions, there's not many incumbents, compared to even, say, the cryptocurrency industry, that's much more matured. And we've got many different sectors. We've got broker-dealers, custodians, exchanges. These are all really important components that we need. We're looking ahead and we're looking at the incumbent investment banks that we have now, Goldman Sachs, et cetera, and how many assets they have under management. And we believe that eventually pretty much everything's going to be digital. There'll be digital representations, or Fidelity with 2.3 trillion assets under management. They have a digital custodian that they've pretty much just launched in the last few weeks. They've been working on it for the last 6 months. These types of initiatives, it's not just going to be Fidelity. It's not just going to be these guys. All of these investment banks, we believe that there will be a transition. And there's still a lot of infrastructure to be built. So, we're investing in that, but we're also investing in, landmark asset deals because obviously the assets are going to come after the infrastructure. We invested in the St. Regis Aspen. We thought that was a really important statement to make about, how properties, $217 trillion market, how commercial real estate, how it can be made more liquid, fractionalized ownership. We're really looking at those two sectors, but we expect to see a lot more assets coming out.
So you guys have invested in all these projects, and when it comes to security tokens, we know there are only a handful, right, that are currently active. How do we bring liquidity into the market so that it becomes more active? And more importantly, what type of liquidity should we be attracting?
So I think there are a couple pieces to that. One, I think the on-ramps need to be easier for traditional investors to get onboarded. I think there's a lot of complexity. Just, how many people in this audience have actually registered on a security tokens exchange? No one. Yeah. Oh, maybe one. Okay. Well, I guess my point is, again, it's not necessarily simple and easy to access these new digital securities. So I think, again, a lot of it comes down to education, and I think also, these security token exchanges are very, very new. I mean, T0 literally just launched last month, a couple weeks ago, and the trading that's on there, I think there was only like 100 accredited investors in their security tokens. So, I mean, we're talking incredibly limited liquidity that we're seeing today. I think another kind of important point is in this ICO space, we really opened up Pandora's box, where you enabled virtually anyone in this room could buy cryptocurrency. Whereas when we're moving to STOs, we're moving to a space where we need to follow regulation, we need to follow securities legislation, and as part of that, the only investors that can access it are really accredited investors. I have a lot of thoughts about this. Going back to the United States, our securities laws were written in 1933. I do think, for me personally, I don't understand. Well, this is just my personal view, but I wish more investors. We could open up to more retail investors. If we can gamble, why can't we buy securities? That's always been a question in my mind. I think one area that's interesting, having spent a lot of time in London and the UK, is if you looked at the kind of early market there around, I was always fascinated in looking at things like Kickstarter, these kind of crowdfunding platforms where people are crowdfunding these projects. And I said, well, why can't I buy equity, and particularly some of these projects? And London really led the way. There was a platform called Seedrs and Crowdcube, which you might have heard of. And what was interesting is they did qualify the investors as accredited, but investors could self-qualify by filling out a questionnaire that they were sophisticated. And so, the question is, will we see more regimes that enable investors to self-qualify and claim that they're sophisticated and be able to onboard those people? Because right now we're restricting ourselves to really the high net worth individuals and to security tokens. So yeah, I think for me it's looking at some of the legislation and trying to see how we can harmonize across many different jurisdictions. But I think in terms of on-ramps, there's obviously we need greater awareness. We need really beautiful user experiences that can enable customers to interact with the security token exchanges and make it easy for them to register and onboard. But also, I think there's a legislation question. How do we make this easy across many different geographies?
Yeah, definitely can piggyback off of that. So I think really the biggest problem is that when people got into ICOs, the reason why the hype and why it moved up so fast and everything was just exploding was because it was easy to get on. Like anyone could just go, get on a Binance account, get on a Bittrex account, log in, put in some money on your credit card and buy it. So the thing is we need to figure out new regulations, I think, is the problem. And we need to make a global regulatory framework for security tokens because they are for the world. They're not just for US. They're not just for Thailand. So countries, I think, need to come together, sit down and figure out, hey, what do we really need? What do we need so that we can all work together, have the same rules, make it easy for regular people to invest, whether it be $100 or $1,000? Do they really need to be accredited? Is that the whole point of why we created cryptocurrencies, so that everyone could participate? So these are the questions that I have in my mind. And another thing is security. So we see every single week Quadrica and Mt. Gox and all these stuff. And there's no one really with the SAFU. We don't know if it actually would cover people if Binance, like for example, got hacked. So what do we do with the security side? Do we know if we're actually secure or not? Sure, there's T0 and they raised a lot of money, and sure they'll be backed, but they don't have any proof of concept. They haven't been around since like the National Stock Exchange of Thailand for years and years and years with a track record. So how are institutional investors going to feel safe? This is the stuff that I'm always asking myself and thinking, it's great that we can have this security token, but can everyone participate? Is it going to be safe? Are we going to have national and global actual regulations so that everyone can participate, at least at a smaller level, whether it be not being an accredited investor with $25,000 to invest? Maybe it's like $1,000 so that you can invest. But let's open up the books and let's let everyone have a chance to be able to invest, because they should be able to. Just like you said, if you can go to a casino in Macau and gamble $1,000, why can't you do that and invest in your future, your children's future, et cetera? So those are the three things that I'm constantly thinking about to answer that question.
Yeah, so I think that we're seeing a lot more awareness from retail investors, consumers about how the financial system works. There's still many things that don't make sense. Like, it doesn't make sense to me flying from New Zealand, where I'm from, to Bangkok, and I stop over in Kuala Lumpur, and I have to change my cash. I have to pay a fee to the intermediary. It just doesn't make sense. Like, where we're at with digital technology, like, I believe that if you can send an email instantly, you can communicate instantly, then there's no reason that you shouldn't be able to do that with financial technology. And we've seen that, retail investors they're very powerful, and they're not to be underestimated, even though we have these large institutions and regulatory bodies like the SEC that are they're slow to move, and that's good. That's what they're there for, to keep us safe. That's great. But I think that because of the awareness that retail investors have now of what digital technology can enable, like fractional ownership, I think that if anyone can own a 0.1% of a Picasso, for example, I think that's fantastic. And I think that most retail investors would agree with that. And we're going to see more pressure being put on the institutions to accommodate this demand, I think. And in turn, they will influence the regulatory bodies. They will work together closely with them. So I think that the whole financial system is becoming much more democratized, actually. So, and the technology is the foundation of this. As soon as more people have awareness about what is possible, they're not going to accept these frameworks that we have, which have locked out, not 90% of the population from participating fully in the economy.
So the question was around liquidity, wasn't it? Yeah. So I think liquidity is probably going to be a bit of an issue, at least in the short term. Now, remember ICOs, when they first came out, as you said before, anyone could participate. 60, 100,000 people all of a sudden funding all this money, retail investors, could be $100, could be $5, anything. That brought with it liquidity, and it brought with it awareness. And that's why those projects did quite well. Now, the other thing is that now with STOs, which I consider a much more professional and above-board way of financing, you can actually value them. Now, could you value an ICO, really? How is it that someone could issue an ICO and be like, okay, my market cap's going to be 200 million, whatever? That's literally what would happen. It's like, they could come up with a number. And for STOs, that's going to be pretty much impossible, because you can value them. So are we going to see liquidity and turnover like we saw in the ICO boom? No. Number one, the sample size of investors is going to be much smaller. They're going to have to be accredited. I think there's going to be issues with exchanges. So, for example, KYC, everyone will have to be KYC'd. And then it's not like you can have a token and then transfer it out of that exchange to somebody illegally if they're not KYC'd either. That's transferring a security to somebody else. So it's those sorts of things that I think the ecosystem's going to have to get around. I believe liquidity will come in some form, but it won't be, I think, what we've all been used to over the last couple of years.
So to shift that question over to the other side, from an investment perspective, we have people here who have existing businesses who are revenue positive. How do they prepare themselves if they choose to use an STO as a way to fund and scale their business? How do they prepare it to attract proper investments? And what type of parameters should they have ready so that they can go to existing funds and say that they're ready to issue an STO for themselves?
Okay, I'll start on this one. I would say, firstly, if you've got a business that actually makes money, number one, that would be the first point to start, is to have a look at, well, number one, why are you raising the money? It's like doing any venture capital or private equity deal. I mean, this isn't that different. But what you are hoping for is you are hoping for some secondary market liquidity at some point in time. That is really the benefit of this. It should be a cheaper and easier way to finance. That's what an STO is. So can any business actually do an STO, asset-backed, whether it's fractionalized ownership, or whether it's just a company that's making revenue and you're promising dividends? Yeah, anyone can. It should just be, the whole point of it is for it to be an easier way of financing. That's it. So in answer to your question, I think anybody can effectively do it. But the question is, what is the benefit? Is it actually going to be cheaper for them to do that? And is there an incentive for the investor to contribute to an STO?
I think there is, because if you take a look at how much does it cost to maintain a company here in the public stock exchange in Thailand, it could be $250,000 a year. I'm guessing. I'm not from Thailand, but some of you can validate that here. How much does it cost to maintain a security on a security token exchange? Managing wallets, paying the issuer some fees. Perhaps a lot cheaper, right?
Ironically, it's a little bit more expensive in some cases now, just because the technology is so new and the providers in the space are still relatively limited. There are not that many players enabling to give you the infrastructure to launch your own security token. But yeah, I mean, I think in kind of the midterm, hopefully this is an alternative, in my view, to reverse merger activity. A lot of companies buy shell companies or reverse merge into shell companies in order to get a public flotation and a listing and trade their shares. And I think hopefully security tokens can be a cheaper alternative to doing that. And I think that to me is you look at the reverse merger market and you look at that is a huge opportunity for security tokens.
Yeah, I would say security token offerings, the whole idea behind them and ICOs was cutting out all these middlemen, all these intermediaries taking a cut, taking a cut, taking a cut. By the end of it, you're barely making any money. And if you're a business out there right now and you're making a lot of profit and you're thinking, okay, in 5 years, this is the future, 10 years, this is the future, you should start thinking about it at very least. Doesn't mean you have to do it right now. Like, you don't have to spend all the money right now, but you can start thinking about it and how you might do it, how you should structure it, and how the token economics might work for your company. That's not a bad idea. Hire a consultant potentially to teach you what you need to know, so when you're ready to actually do something like that, you're already got the mindset and you're not 3 steps behind. So I think it's more about planning for the future, your 5-year plan. It's about writing that in there. And if you think you have enough income and enough money coming into your company, enough revenue every single year, why wouldn't you think about this as a potential option? Because this is really the future. As much as people might think, oh, it's just a security token or it's a bleep coin or whatever you want to call it, the thing is, it's actually something that people are building around. You got BlackRock, you got Fidelity, you guys like Coinbase are going into STOs. It's going to be bigger than people realize, but it's not going to be right now. And if you're okay to think 5-10 years into the future, that's what you should be doing right now. Not thinking about, okay, right now I can make a bunch of money and raise a ton of funds if I don't really need it. I've told companies don't do STOs already before because it's not really right for them and they would swallow too much of their funds to actually do one. So you have to think really deeply, how is this going to benefit my company, and will it benefit my company to do it now? Or is it beneficial to think about it, and as it gets cheaper, and as the frameworks are there, and as the exchanges are actually opening up, then maybe there's a possibility for you to go, okay, now is the right time to hit the button, but I've already set myself up for that.
Yeah, to carry on that point, I mean, I think that I totally agree with what you're saying about it doesn't quite make sense for a lot of companies to be doing it right now, but it does make sense if you want to make an impact for your company and to be a leader and be seen as a leader in the space and someone who's forward thinking, because STOs, they're incredibly cost effective, they're incredibly fast, and again, we live in a digital economy, so legacy systems and everything on paper, calling up your broker and everything, I don't know, STOs are the future.
Very relevant in Thailand, right? You have one of the economies here with one of the fastest growing fintech sectors in the world, right? To be able to take a business, capture a wider audience, raise capital from people that actually have a connection with your business here, it's incredible. I think you don't just do an IPO or just do an STO, you can have both. Why not a hybrid model to raise capital from 2 different sector markets, right? I think it's a win-win situation.
I think an important point to make on the STOs is there needs to be demand for that security already. I think it's not just I think there's definitely a fallacy where some people think, oh, I'm a startup, let me approach this new form of financing. No, I think it really needs to be demand for that security already, and hopefully, and I think the other challenge is right now there isn't much liquidity, but I do think there's an opportunity to invest in thinking about where this market will be in a couple of years from now. And so there are some pioneers that are taking assets that previously never had liquidity. I think real estate is a really good example. And thinking about how they could structure security tokens around those assets. But those are trophy assets. The St. Regis Hotel is a trophy asset. It's an asset that people understand, that there might be some demand for already. And that's where it can make sense. But I think that is really the opportunity for security tokens.
So lastly, on this topic of liquidity, when do each of you think we will see that happen? I want to sort of get a time frame from all of you. And I want you to sort of pin it to a range of a number of months or years, depending on
Are we putting money on this? Or?
Yeah, it's recorded.
Let's do a bet. Okay, I'll kick it off. I think probably 12 to 18 months is where we're going to start seeing bigger liquidity. And it means exchanges actually working together to do that. I think that first mover advantage in terms of the exchange that can crack the secondary market for STOs, they're going to kill it. They're going to. So I think that there's going to be a number of them that launch. I think any subsequent ones that launch down the track probably aren't going to gain momentum because really you want the most users on board. They all have to be KYC. They all have to be accredited. I think that's going to be the key. So for me, I'd say 12 to 18 months is where we're going to see it ramp up. Yeah,
I mean, by nature, blockchain, which is, the underpinning technology behind security tokens and cryptocurrencies, etc. Obviously, one of the massive advantages is instant transaction. So, actually, one of the companies that we are looking at is called OTCXN, and they're going to be one of these companies that really accelerate the progress of liquidity in the markets. They're basically a blockchain prime brokerage. They've got all the biggest many of the biggest prime brokerages signed, HSBC, FXCM, etc. And they basically are aggregating liquidity. And there's a lot of institutional interest. Fidelity's interested in them. And I think that's going to be a big driver as well, is the actual technological solution. And then, obviously, there's just all the onboarding and so forth. But, yeah, I expect that by the end of the year, we're going to see some big advances in liquidity.
Okay. I might have a longer-term look, but I think that it's going to still take time because we do still need regulations. We still, as institutions, need to know what can I do, what can't I do. Sure, they can follow the old security laws, but they still need frameworks of, if I invest, how is this going to work? So liquidity will definitely come. I think it's a little bit longer term, maybe like 3 years or so, maybe even 5. But that doesn't mean that it's not going to grow. I'm just thinking that when we're going to see it, really get to that point where everyone's doing a security token offering, it's going to be probably 5 years or so. Doesn't mean that we're not going to see tons of them come out. It just, the liquidity will come when we have the rules and the regulations all kind of set in stone. Now, what you were saying, Matt, was exchanges working together. Actually, BlockRake works with a company called BlockStation. And their whole plan is they've created a whole entire regulatory system with KYC and AML and ChainWatch that they created. So basically that you can be a national stock exchange, plug into their system, and you are fully compliant, and you can trade security token offerings, you can trade cryptocurrencies, and while all those national stock exchanges link up to them, you'll be able to have a global order book. So instead of seeing wash trades and spoof trades like we're seeing on all these other exchanges, you'll see real-time trades on all of them at the exact same time. And that will definitely help with liquidity because you'll see people from all over the world who's investing in what. And so something like that, I think, could be the future. They've already proven the concept on the Jamaican Stock Exchange, and I think that the more stock exchanges that do this and link into their system without having to pay for it, they do it for free so that they can actually build the space and just share some fees with the exchanges. That's something that could definitely push liquidity and legitimacy forward.
Yeah, no, I think I'll echo. I think it's 3 to 5 years. I don't think it's necessarily this year that we're going to see just a massive uptake of security tokens. I think it's coming. It just takes some time. I think really custody is one of the biggest issues that gets talked about a lot. Just learning how to set up a wallet if you're a corporate and learning how to essentially manage all of the various pieces around security tokens. There's still a lot of education, and I think it's good that very large institutions are entering the space. You have some of the biggest banks that have expressed interest in doing custody. Nomura, you have Fidelity. You have all of the big players coming into the market saying they're going to be doing State Street. Big institutions saying that they're going to be doing custody, which I think will help. But I think it just takes time. So yeah, 3 to 5 years is my number.
Just one thing on that. I think we keep talking about liquidity is in secondary market, right? Like, so you've got your token, how do I get out of it? I think there's a very big use case for security tokens that don't need to be listed. And what I'm talking about specifically is dividends. Now, it is so inefficient in the stock market sending out dividends to existing shareholders, right? Having that on the blockchain via a security token, just having a wallet address or owning that token, all you have to do is hold that token somewhere, and they can send you a dividend like instantly. For like no cost, could be like take them 5 seconds to send out 50,000 of them. So there actually is a really good purpose for security tokens that aren't listed either, and dividend payments is a big one.
So 12 to 18 months, 3 to 5 years, 3 to 5 years, 12 to 18 months, 12 to 18 months. Okay. And that's a good point, Matthew. I think if we are able to see more quality companies paying out real dividends and being able to issue them using this technology, the adoption is just going to grow a lot faster. So to wrap up, we want to save a few minutes for some questions from an audience. Does anybody have any questions for our panelists up here today? In the back of the room there.
I am from STO Filter. We are a business with an STO investment market platform and MVP stage. We intend to serve global retail audience. In your opinion, will accreditation laws be relaxed, and which countries do you see adopting an easier stance on that first?
Yeah, it's hard for me to predict how regulators are going to take to relaxing accredited investor rules. But as I said previously, I think there are certain jurisdictions where you have that self-certification as a sophisticated investor. And I think in those regions, I think there will be a smoother path than other jurisdictions like the United States. It just takes time for regulators to change their opinion on something that's been around for almost 100 years in some cases. So I think, I think it's hard for me to comment on how quick it will be, but I do think it goes back to hopefully having a harmonized global framework for looking at security tokens. And I think by working with progressive regulatory regimes, they will really set the path for other regulators to take notice. So, hard work in a jurisdiction like Thailand hopefully gets noticed and reciprocated in other geographies.
Is this working? No. Hello, there we go. I think Asia in particular has been quite, how do I say it? Most countries have a very different view on security tokens from what I understand. China, for example, they've said they're illegal. Malaysia, the same. How progressive is everyone? I know that there's a lot happening in Thailand, of course. I think the Philippines as well. There are parts of the Philippines where they are looking to regulate it. So what areas are probably going to do it first? I'd say outside of that, Binance obviously being in Malta, I think that those countries and around there have much more relaxed jurisdictions. So I don't think that there's no easy answer to it, is there? There's really not. I think we're taking sort of a shot in the dark for it, but you can tell the governments that are more progressive towards it. Singapore also being one as well.
Yeah, so I work with SEZA in the Philippines, and what we do to help them sort of bounce ideas back and forth on the accreditation side. It also not just comes from the consumers, but also comes with issuance platforms. Right? They're doing a move with Abaca right now to actually create an accreditation service where they accredit the issuer themselves and to just add another extra layer of protection for the investors. And I think that's a great move forward too. There should be accreditation for people investing, but there should also be proper accreditation in regions like Thailand, in regions like Philippines, in regions like Malta, where they are accrediting the service providers themselves. This just makes the ecosystem, I think, a lot more efficient for everybody.
Another point I'll just add is on KYC. I think technology has really improved the ability to verify investors using identity documents and basic information around investors. You're starting to see some standards and reciprocation across different KYC platforms. I think you're going to see that more and more. So I think that's good for onboarding from an investor. You don't want to have to go through KYC for every single exchange that you might be trading security tokens on. So hopefully that helps things in some ways from an investor perspective.
Yeah, and the one other thing I'd like to put out there is Prin, who works in Thailand at the SCT, he asked a group of that I run in Thailand about crypto and blockchain. He asked us, hey guys, what do you guys think that we need? This is something that's really progressive. This is something that governments need to do as well, is talk to the people that are involved in the industry, talk to the people that are in the public, find out what they actually need, so that you guys can work together as a government and all the way down to the grassroots level so that you can actually help people figure out, is this something that they want to do? And the government might say no, and the people might say no, or they both might find some commonality. So I think it's really about collaboration and having people figure out, how is this going to work together, not just have some guy at the top from the traditional model of, this is how we do stuff, and if you don't like it, too bad. More of the let's open up the floodgates and say, hey, what do you guys think? And even if it's not the right answer, it doesn't matter. Get people involved. And Thailand has definitely been in the forefront of doing that. And that's something that I really respect about this country and why I love it living here, because they actually listen to the people. And that's something that needs to happen more often.
So just to conclude, question, yes.
In terms of the secondary exchange, liquidity on the secondary exchange, is the current blockchain technology able to manage the high frequency or low latency trading or not?
Centralized, yes. Decentralized, no. So, in other words, if there's a server that's running it and it's hosted somewhere and it's centralized, then yeah, it can take high frequency trading. That's what Binance does, etc. But then your decentralized exchanges are substantially slower because there's got to be a blockchain transaction for everything to go through. Transactions per second are, way lower than centralized. So, is it going to happen for centralized exchanges in terms of STOs? Yeah, definitely. There's no problems with scaling that with high frequency trading, etc.
And I think just to add, we are seeing massive advances in decentralized exchanges. Binance actually they released their testnet for their decentralized exchange. It's got 11 nodes, so it's not that decentralized, but we're seeing massive progress. So I think that very soon we will be able to experience near instant or instant transactions on decentralized exchanges for security tokens.
Ideally, it should be decentralized, right?
Yeah. Ideally, it should be. That's the purest view. Yeah, it's more secure, much more secure.
How would it work in Thailand for a centralized system? Would that be the best model?
I think for now, all centralized is the way to go if we're talking about security token offerings. Just because they're securities, they need to be governed by somebody. And until there's a framework that is decentralized for security tokens, you're never going to see them on DEXs, not anytime soon. They need to be centralized at this point, in my opinion. And I think that when we have those frameworks built, absolutely we could put them on a decentralized system. But you can't take something that's a security and let a guy like myself, who's not a broker-dealer, trade it with anyone else. It's illegal, like in any country, pretty much. So that's something that we have to build a framework for, and it's something that, again, it's a 5-year plan for sure.
I'd also just say the blockchains continuously are improving and are able to handle higher and higher throughput. Ironically, some of the ones that are really fast aren't as decentralized. They're like delegated proof of stake, which enables it to run much faster because it's actually, in theory, not as decentralized. So it's running it through more kind of centralized, it almost acts like a republic in some ways. So I think the technology will continue to improve, but I think like we saw with cryptocurrencies, it will start with centralized just because it will be faster to be able to, and also the trust around that, especially with securities. I do think it will start centralized, and eventually, and hopefully over that time period, when we start to see more and more adoption of security tokens, the decentralized blockchains will start to really improve.
So we are out of time. Thank you guys all for attending today. It was a fascinating and broad sort of topic to cover. Thank you for Elevator Turns and Stefan for hosting. Actually, earlier, that video was quite funny, the one that he had a guy dancing and everybody followed. And to that point, I just thought that for everybody here that's an innovator, for all the regulators here in the room, I think this is something that we all sort of share in common. Just to keep in mind that it's okay to push forward with these, and we're all looking forward to it, all of us, right? STO regulations. Bluetooth. How many of you guys have Bluetooth on your phone? Everybody, right? Bluetooth, just keep in mind, it was not the first wireless transmitting service or technology that was available. It just happened to be the one that everybody pushed forward to use. And I think when it comes to security token issuance and technologies, we could be doing the same thing. So thank you, everybody, for listening, and that's all. Enjoy the rest of the day.
Thank you.
Big round of applause, please, for our speakers, and of course our moderator as well. So many thanks once again to Matthew Dibb, founder of Astronaut Capital, Jonathan Emsley, Analyst.